All right. So today we're talking about how much money it takes to buy a home, right? So like, which can vary greatly depending on what you're buying, what kind of property, primary investment, uh, second home, condo, single family residence, fix and flip. There's a lot of different things, right, that go into that. So I guess that would be the first thing to determine is like what kind of property are you buying? Let's stick with probably one of the most common um, first time home buyer purchases, which is your primary residence, right? Um, what have your clients used? I would say like in the last year, what's the most common first time home buyer down payment amounts that your clients have used to purchase a home?
So here in LA and Orange County, I've been floating like around that 60, $70,000 range
Right.
for for a down payment. Now there's for sure we'll go into other costs, but typically that down payment is somewhere in that 60, $70,000 range.
And that equates to what, 5-10% of the purchase amount, or
Yeah, we're probably right around that 10% mark. If not, maybe the 8%.
okay.
Yeah,
So a little bit over 5%, a little bit less than 10% on average.
on average, yeah.
Yeah, that would be, yeah, that would be probably like the most common that I'm experiencing as well. If we're talking about minimum amounts, right? Let's talk about specific loan amounts. Like what's a common loan that people use? FHA, right? It's a very low down payment amount. 3.5% down typically on an FHA loan is the amount that you need. And that's 3.5% of the purchase price. Now, with FHA, the mortgage insurance is a little more expensive than if you buy with a conventional loan. Um, and typically, people with good credit have a way better and more affordable mortgage insurance payment monthly if they do choose a conventional loan option. Um, but the down payment's a little bit higher. The minimum down payment, I should say, five
Yes,
percent
minimum down payment, yeah.
with conventional. There are 3% programs, but typically there's some income restrictions to it, so you can't be above a certain threshold to use 3%. So most of the time with conventional would be 5% or more. So I'm guessing the people that you work with use the conventional loan, the ones that put a little bit more than 5%.
Yeah, it's strange. I haven't, and the majority of my clients haven't really used FHA for some strange reason. Usually, and I've worked with you, so you're able to kind of guide them. I'm
Yeah,
not saying that FHA is a bad loan program. It's great,
right.
especially to get into your first home. But we're roughly going conventional, minimum down payment for conventional.
Yeah, and probably I'm guessing at least the ones we work with, they had great credit,
Yeah,
and they were putting less than 20%. So the numbers just worked out better for them to use a conventional loan for that reason that we just talked about a little bit, which was um, the mortgage insurance is a lot less expensive. If you have a 740 and above, and and you're going to put less than 20% down. FHA is great. Where in the sense that if you have a lower credit score, your mortgage insurance won't be changing. It's not going to go up. It's going to stay the same. It's going to be fixed as the same as if you have a 740 FICO or above, as opposed to with conventional, the lower your credit score, the higher your mortgage insurance is going to be. So those are one of the biggest difference. So if you do have a lower credit score, it might benefit you to go with an FHA loan for a low down payment option because your mortgage insurance is going to be a lot more expensive. It's
yes,
going to jump based on your credit score. So that might be one of the reasons that the clients that you and I had together, we went with the conventional option. If we're talking, dollar amounts, at least for the LA Orange County market, let's pick an average amount. I have my calculator here just because I can't do the math exactly in my head. So eight
yeah,
hundred thousand. What's 5% of that? 40,000, right?
40,000.
You know, and typically closing costs are going to be So here's another caveat. Okay. So if you put more than 5%, so if you put less than 20%, but also less than 10%, then in California, you have to have your property taxes and home insurance joint with your payment. Okay. So that means your taxes and insurance are going to be paid together as you pay your mortgage payment monthly. And when you buy your home, you have to put an initial deposit into that escrow account, which typically is anywhere between 3 to 5, usually 3 to 5 months in advance, so that when your tax payment is due, there's enough in the escrow account for your lender to send the payment and be able to cover that amount fully. So that's going to up the amount that you need to put down, because now you're talking your closing cost, your title and escrow cost, as well as your initial deposit into escrow cost. So if you're talking rough number, right around 15 grand, including the impounds. The more expensive your home, the higher your taxes and insurance. So it's going to be a little bit higher. But so let's just say you're buying an $800,000 home. You're putting 5% down, which is 40,000. And then now you have to account for about 15,000 rough estimate for your title, escrow, closing cost, loan cost, and initial deposit to your escrow account. So right off the bat there, 55,000 as a round number. Might be a little bit more depending on the property amount, as a minimum down with your closing costs paid out of pocket.
Yeah. And then we typically see, there's, and we do prep everybody for this before we even go into that buying process, but there's two little sneaky expenses in there that, during that home buying process, not everybody is really aware about, but it could sneak up on you.
Yes.
And those are.
Talk to us about that. What are those sneaky expenses that maybe most people are not counting on?
Yeah. Well, that would be our inspection.
Yes.
Which takes place probably 1 to 2 weeks inside of when you got your offer accepted. I'm sure you've seen this. We're talking about $600 for the standard home inspection.
Yeah, $500 to $600 depending on the size of the property.
Yeah, size of the property, and there's always added expenses if you want to go further into detail. But for the standard home inspection, we're somewhere between 5 to 6. Yeah. We'll split the difference. We'll say 550.
Yeah.
And then a couple weeks after that, or a week after that, we have our appraisal. And very similar to that home inspection, you're talking another $500 to $600, depending.
Yeah, and which I guess the home inspection it's not mandatory, but it's highly recommended. The appraisal, for the most part, is lumped into that total closing cost portion, but it is a mandatory cost for the most part, because if you're getting a mortgage loan, the bank's going to want to do an appraisal. And those are two things also that most people don't know, is if you do your home inspection and you cancel escrow, you do your home inspection and your appraisal, then cancel escrow, then you're out of pocket those two costs there, $1,100-$1,200 for canceling escrow, because the appraisal is paid to the third party appraisal company that is hired by the lender or the bank that you're doing your mortgage with, and the home inspection that fee is paid directly to the home inspector by the potential buyer when the home inspector goes out to the property and inspects the property. So, yeah, that's why it's very important to enter escrow into a property that you intend to buy. Otherwise, it could get expensive, if you change your mind or whatever. Obviously, you never know, because unexpected things do come up. Like, something's wrong with the property that you weren't aware of, and you and the seller can't reach an agreement in terms of a credit or a price reduction or something like that. So it is unfortunate when those get canceled, because the buyer is out that money, which is not chump change. $1,000 is $1,000.
Yes, especially considering that there's always little costs here and there once you end up moving into the property, and being out 1,000, you could have done something with that.
Yes, sir. So that's for a conventional loan. Now let's take into account that we're buying a same price property with FHA. So 800,000 with 3.5%. Let me do the math here. Times 0.035. I keep skipping the number. 28,000. So 12,000 less than with the conventional for the same price property. And the impounds will be about the same, and your closing costs will be very similar. So we'll add 15,000 to that. 800,000. Yeah, 28 plus 15. You're talking 43,000 instead of the 55.
55, yeah.
So it's a good amount less. Now, if the mortgage insurance is more expensive, then the payment might be a little bit higher. So couple things to kind of take into account. Do you want a lower payment, or do you want to put less down because the down payment amount is less? So those are kind of things to consider on the buyer side when buying a property, right? But not everybody puts the minimum down, as you and I both know, right? Sometimes people want to put a little bit extra down. So I feel like, though, a common misconception is that you have to put 20% down, which you don't, right? There are the lower down payment options. And most people that you help, do they put 20% down? Or?
No, it's been very rare that I've seen anything more than like that 10-15%. It definitely does happen. Yeah. But and I think that's what we prep our clients for. It's usually one of the first questions you and I ask them is, what is your monthly maximum budget? And we talked a little bit about it last week, because that value, it's the down payment is going to be dependent on it. The house price is going to be dependent on it, because ultimately it's going to come down to, well, what can I afford monthly? And does my down payment help me get to that monthly number?
Yeah, that's an important thing. It's like, what's my payment monthly? Am I going to be comfortable with it? And so on and so forth. A lot of people, I mean, if you do have the 20% down and you want your payment to be lower and you want to not have to pay mortgage insurance, then yeah, it's a good thing to put the 20% down, because you'll avoid that extra mortgage insurance payment, and your mortgage payment will also be less because of the higher down payment. Your loan balance is less, so in turn, your mortgage payment is less as well. But it's not a requirement on a primary residence. Now, the 20% down typically is a requirement if you're buying an investment property. Most of the time the lender's going to want 20% down. If it's an investment property, that's going to be a rental or an Airbnb of some sort, things like that. But there's some type of loans for investments that people are not aware of, where your down payment amount might be a little bit less. They're called fix and flip loans, but these are more for like seasoned investors, where they're gonna approve you based on your experience, right? If you have a lot of properties that you've fixed and you've flipped in the past, you can get a specific hard money loan or an investor loan that's going to allow you to put 10% down and also finance the remodel cost into that loan, because most of the time the lender will finance 100% or 90% of the rehab amount, as well as 90% of the purchase price. But most people buying their first investment property will probably need to go with that 20% amount.
20% down for sure.
What about second homes? Have you helped anybody buy second homes as of late?
As of late, no, but I've definitely had clients do that second home, and there's definitely a couple things that surprise them. Mainly being that they can't go in with as little money as they think they can go down with. 3 and 5% doesn't usually happen. I mean, thankfully, my clients that have had the second home, I've been fortunate that they had cash, and that was their option. Yeah, that helps. But
Go ahead.
for the everyday person that is maybe looking for their first, second home or vacation home, or, a mixed use of, Airbnb and vacation, 3% is not usually allowed.
Yeah, no, typically on a second home, 10% is the lowest that I've seen. For the past couple of years, some lenders even got a little stricter, maybe allowing 10%, but the pricing in terms of the rate was really bad.
Mhm.
And maybe at the 15 or even 20% mark, excuse me, the pricing got a little better. But typically 10%. I myself bought a second home in Joshua Tree as a 10% down payment loan, with a 10% down payment loan. And what are the requirements for a second home? Like, what determines if that property can be your second home? It's usually kind of a vacation type of home, so it needs to be a certain distance away from where you live, right? So if it's on the next street over and you want to buy it as a second home, the lenders won't really allow that. It's usually has to be 50 miles or further from where you live, and have it make sense as a second home city. Or, like for us, we live here in Orange County, LA County, and if you buy a property in Big Bear, it's 2 hours away. It's a known vacation or weekend place to visit. So the property would easily be a second home option, right? Now, if you have 10 other rentals in Big Bear and you want to buy your 11th property as a second home, are you able to do that? It might be tougher because the lender is going to see that you have a lot of rental properties, but it's not impossible. If you have a viable explanation of why this will be your second home, it makes sense. So, like, for example, I had a client that owned investment properties in Indio, near the Coachella Fairgrounds, and he was going to buy a condo for him and his family to be able to go out there. It's going to be less expensive than the single family homes. And then sometimes they would go out there, he would work on the homes and things like that, or um, he wanted a place where he could stay that was close, that was less expensive, right? So we wrote up a letter of explanation on his loan application that he wanted this condo for him and his family to be able to stay while they were there, maybe working on properties and things like that, because he had multiple properties. So sometimes he would be there for a week, and one of the properties would be rented for 3 days, and then he would need to stay and maybe work on another one. But now this one's rented, so he didn't want to be having to hop around the homes, and he also wanted a place to be able to stay at in that area without having to maybe, you know, cancel the weekend on Airbnb and lose out on some of that income. And we were able to get him approved for that condo in the same area where he had other properties, but it made sense to the lender, so they approved it. For me, when I purchased the Joshua Tree property, I had no investment properties, and Joshua Tree is 2 hours away as well, about 100 miles from where I live. And so we were able to get it approved as a second home and put less down, 10%. So made it a lot easier because 20% is double the amount on the down payment. So it would take a little longer to kind of save that up. And what are the requirements for a second home apart from the distance? Is that you occupy that property for 2 weeks out of the year as your second home. So
As your second home.
you have to occupy it for a minimum of 2 weeks out of that year for it to be considered a second home. So that way people kind of know a little bit of what entails a second home, and to be able to buy it with 10% down instead of 20% down.
Dang.
Right?
And what would you say are kind of some extra expenses out of that direct buying process that you would recommend people save or budget for?
Well, it's always good to have reserves in general, right? Have a little bit of extra cushion for unknown incidentals. But apart from just a general cushion, maybe some furniture. You're buying a primary residence. So a lot of times you can take the furniture that you have at your existing place, maybe that you rent, or if you live with family. But if you're gonna move into a bigger place, you might need additional furniture. Like maybe now you have the 3 bedrooms instead of 2. You're going to need some money saved up to furnish that 3rd bedroom, or your living room is now a lot bigger than where you currently live, or so you're going to need maybe, a bigger living room set or a new dining room table. So um, the exact amount, I guess, will vary depending on your needs. Some people are like, "Hey, we just want the house. We'll figure out the furniture part later, and we'll buy it as we go."
Air
Don't
mattress,
get a
baby.
loan for it before you close on your home. We talked about that last time. But yeah, I guess it's going to depend on your individual needs. But a budget for some furniture is always good. Um, Maybe some repairs or upgrades to the home that you're moving in. If it's turnkey and you don't need to touch it, it's great. Sometimes you need a little thing here, a little thing there that you were aware of, but purchased the property anyways. Maybe you got a good deal for it for that reason. So that's always good. But yeah, mainly some furniture and some minor repairs or upgrades that you want to do on moving to the property. You know,
I got one more for us.
yeah.
Moving expenses.
Oh, yes,
'Cause
definitely.
that is not fun. I mean, I've definitely been, as soon as my clients have closed, I will go help them.
Yeah,
But if you're hiring movers and you're traveling some decent amount of distance, you don't want to be the one who goes back and forth spending the time and gas. So
no,
budgeting a little bit for, or you don't want to throw out your back either. Hire some movers to help you out. And that, I think that's something smart to budget for, along with that furniture that you're getting,
and
for
that
sure.
costs some money. I hired movers from when I moved from an apartment building to the house that I own now, mainly because we had to go up flight, we had to go up and down stairs and elevators, and we needed to move within 2 days. So I didn't want to risk not being out in time and having to pay extra and all that stuff. And Yeah, it was more than I mean, it was more than I thought it would be. It
Yeah.
wasn't like a grand amount, but it was, at least a few $100s, maybe close to $1,000.
And that's what I tell people to budget for, is like, to be on the safe side, somewhere between like $1,000 to $1,200
Yeah,
will probably be able to cover a majority of those moving expenses.
yeah. Because if you need to purchase boxes and then the moving company and depending on how many guys you're gonna need, it's usually priced by how many rooms or the amount of furniture that you're moving and things like that. So yeah, 500 to 1,000 seems like a safe. Closer to 1,000 seems like a safe
Yeah,
finish
closer to 1,000.
for moving expenses, and unless you want to do it yourself, which is also doable, but you'll still probably need to rent a U-Haul or something like that.
Yeah,
So that in
and even
itself,
that costs money.
yeah, that's going to be a couple $100s right there. So, or what are those pods that they put where you put all this stuff inside and then they take the pods to the new place. So
Yeah,
that's a similar option. You're moving the stuff into the pods, but there is a fee associated with the movement of that pod and all that stuff. So yeah, definitely things to keep in mind. So, what about anything else that comes out of mind that people need as a moving thing?
for expenses, honestly, in my mind, what I try to help people budget for is that moving expense. Like you said, the home repairs. No home is perfect. That
Yeah,
inspection that you paid for is going to reveal something, and having a small budget to take care of something that is going to be a headache,
yeah,
that's always good to have, because, like, I think we talked about it last time, no home that you buy is going to be immaculate, perfect, nothing wrong with it.
yeah, yeah. There's always something.
There's
Now,
always
what's a couple ways? A couple ways for people to maybe minimize those costs would be with your lender, you can do something called a credit for interest rate chosen, right? If the lowest rate they can give you, just as an example, if the lowest rate they can give you is 6%, but you choose 6.5%, there's usually a built-in credit that now they can apply towards your closing cost. So you don't have to bring that money out of pocket because it's going to be covered through this lender credit. but your rate will be higher, so your monthly payment will be a little bit higher, right? So, but your upfront cost to move into the property will be lower. So that's one way to reduce your upfront cost. You'll have a higher rate, but your upfront cost will be lower.
Yeah.
Another way is what? What's another way through negotiations? That
Well, negotiations, and we've been fortunate here in Southern California that you can either ask a request for repairs through your negotiating, which if there's typically what I found, if there's some big ticket items or some minor expenses that need to be taken care of, you could typically negotiate with the seller and have them help you out, whether it's with a credit of money so you could do it yourself, or request that they repair it before you move in.
Yeah, yeah. So that'll help because that is usually applied towards the closing costs as well. It won't be money in your pocket in the sense that they give you the money directly, but it lowers your cost to get into the home. So now you keep more of your money in your pocket to apply that towards, the repair. So if they give you a $5,000 credit and your closing costs were 15, now your closing costs are only 10, and that extra 5 that you were planning on using, now you get to keep and use for whatever your expenses are moving in. So that is a great way to kind of minimize your upfront cost, but not a guarantee because most of the time you don't get into the contract knowing you're going to have X amount of credit. So not something to bank on per se, but an option
Yes.
once you're in escrow, depending on the property and things like that. So I think that's pretty good in terms of an overall picture or snapshot for people. Obviously, there's different scenarios and different variations of closing costs depending on unique things. Like if the property has Mello-Roos, your closing cost might be a little higher for your impounds because your property taxes are going to be higher than what the average, I don't know, for California, 1.25% is, right? So little things like that can change, but I feel like as a general rule, we kind of covered most of the closing costs. So if we think of something, we're just gonna have to tell people on the next podcast episode. So
For sure.
So last week we started the funny real estate moment segment at the end of our podcast, right? And you gave us a good one. You made me dig deep.
Oh shit! Okay.
A good one. So, and I have a good one. It might not be as funny or as entertaining as yours was, but I do have one for a property that I purchased out in the desert, Yucca Valley, which if people don't know, it's a city next to Joshua Tree, so they're very close together. And I purchased this property that had squatters in it. Okay. Knowing now, I probably should have done a little more research in terms of just the whole property in itself, but that's a different story. But let's just say, okay, so let's go with what occurred. So I bought this property. It had squatters. Once we close, I go there, I knock on the door, and I'm like, hey, I'm the new owner. I want I want to have access to the property, so what can we do, right? Or who's the person I should talk to? Because there was several people in there, and it didn't look like a safe bunch. Like the lady that answered the phone was actually pretty nice, but you could tell that some of the people in the background were a little bit
Suspect.
I don't know, suspectful characters, right? So anyway, she was very friendly. She's like, "Oh yeah, here's my number. Call me. There's this other guy. Then he's the one that you should talk to or whatever." So I get her number, and but she's like, "Are you sure you're the owner? Because we have a lot of people coming around here saying they're the owners." I'm like, "Nope." Actually, you know what? I went there right before we closed escrow. Hey, I'm about to close escrow. Wanted to introduce myself, and she was like, "Are you sure?" We've had a lot of people saying that. I don't know who was saying that, but they had been in this property though for years. We don't know exactly how long, but from what the neighbors told me was between 3 and 5 years that they had been living in that property, squatting in it. So whoever owned it was kind of either really far away or it was an inherited property where no one was really taking care of it or something along those lines. So I ended up, calling the guy, or I ended up calling. I spoke to this other guy that was her boyfriend, apparently, and so I was able to negotiate, luckily, for them to move out. I was like, hey, look, typically I spoke to an attorney. They're like, you have to evict them if they don't want to leave, right? There's not, you have to kind of go through the eviction process if they've been there for over a year. But I spoke to them. I'm like, hey, look, um, I need access to the property. This property was actually red tagged by the county of San Bernardino, which means that if it doesn't get fixed by a certain amount of time, they can actually seize the property, right? And basically it was red tagged for being unsafe. There was a hole in the ceiling. The property was completely destroyed. Once I got in to the property, I was able to see that it was completely gutted. There's no toilets, there was no sink, there was none of that, right? And these people were living in there that way. But so I was like, hey, I need access to the property. I need it to be vacant so that I can repair it because it's in really bad shape. I can either hire an attorney, pay the attorney money to go through the eviction process, or I can give that money to you, and I don't have to pay an attorney, and I give that money to you, and you move out on a certain date, and we established a date, which was 2 months later, 60 days. So luckily they agreed to move out on the 60 days, on the 60-day timeline. Once we got to the 60 days, they're like, hey, we need another week. And then I'm like, well, okay, but that's your hard line. After that, I have to start the eviction process, and I'm not going to be able to give you that money anymore. But if you agree to move out, I'll bring you cash. We'll sign an agreement that I'm giving you this money for you to move out. There's a term for it in real estate. It's called cash for keys. And so after talking to the neighbors, what I realized is this was like a drug house. Like the neighbor directly over. Now, granted, this lot was big, so it was 4 acres, and the neighbor's lot was also pretty big. So the homes weren't really close together, but it was just like a chain link fence in between, so they could see everything going back and forth. And he was like, yeah, there's people coming in and out 24 hours a day, 7 days a week, all kinds of people. It's not just the people that live there. It's like a revolving door. People coming in and out. He's like, I'm pretty sure they're doing drugs. And once we got access to the house, they were definitely doing drugs because we found drug paraphernalia everywhere. So anyways, they agree to move out. I get there on the day they're supposed to move out. And they're like, we need more time, or like time in the day, right? And I'm like, all right, so how much time do you need? Oh, okay, call me in a couple hours. Like, we're working on it. And I'm like, well, it was getting late, it was getting dark. And what I wanted to do is, as soon as they moved out, I needed to seal the property so that no one else would go back in there, because I wasn't going to be living there. I wasn't going to be staying there. And if people were used to coming in and out all the time, then they would just hop right back in. So
yeah,
we ended up hanging out at another house that I actually temporarily at another house that I had nearby, but we ended up having to just hang out in the parking lot of Home Depot in our car, just waiting for them to give us the green light. Finally, I was like, hey man, it's 8 p.m. Like, we need you out. Like, we need you out today. Otherwise, I'm not going to give you guys the money. So they were like, okay, well, let's meet somewhere then. And I'm like, okay. So I had them meet me at Taco Bell, signed the document, had someone else at the property, making sure that it was vacant and no one was there. And it was honestly kind of nerve-wracking because I'm meeting them at a Taco Bell in the middle of the desert. I have, all this cash in hand. And I was like, what if they just, I'm going to give them the money anyways. They don't need to rob me, but
yeah,
someone there, they take the money. Anyway, all these kinds of things went through my head. Luckily, it worked out well. I gave them the cash. We signed the agreement. No one was at the property, but now it was 8:30 at night and it was dark. Right? So we have to go back to the property. We had purchased about $600 worth of plywood because we're boarding up all the windows. We're boarding up the doors. There was missing doors in the back. We had to board up the garage door. And as we're doing this, luckily the neighbors came by and were helping us, right? So it was 2 brothers, and they were awesome. They had their tools, they were ready to go. They were very pro Second Amendment, so they had their concealed carry. They're like, don't worry, no one's gonna mess with us, because it was kind of sketchy in the middle of the desert at night. And so we're out there, and people are coming by as we're boarding up this house, hey, I'm looking for so-and-so. We're like, dude, they don't live here anymore. Don't come back. And they're like, are you sure? We're like, dude, we're sure. Like, so we're like, luckily we did board it up. Otherwise, I probably would have found other people there the next day or day after or whatever. And yeah, so that was our story. We got him out. It cost me a few $1,000s. We boarded the house up. We had to tell some drug users to not come back, which probably about 3 different cars in the span of like 2 hours came by. And then the only thing that happened afterwards is the guy was stealing my mail, but my neighbor told me, and then so I put a new mailbox in there with the lock. I called him like, dude, don't.
Oh, the guy who you gave money to was stealing?
The guy who I gave money to. I don't know if he was stealing my mail, but he was going to the mailbox and taking all the mail. I don't know if I was getting any mail yet, but I was like, hey, you can't use that mailbox anymore. It's like, sorry, I haven't changed my mailing address. I'm like, dude, change the mailing address. I'm going to put a new mailbox. I'm going to lock it. Do not get any more mail. If I get any mail for you, I will let you know, or I will just put return to sender, and but you're not allowed to go through the mailbox anymore. So it was definitely a learning experience. So yeah, it was not easy getting squatters out in the state of California. Not sure the regulations in other states, but in the state of California, it's not easy. So
I have so many questions, but I got to ask 2.
Yeah.
One, did the guy make you buy him Taco Bell?
No. No. But you had more than enough money to buy plenty of Taco Bell after that. Yeah.
Number 2, dude, what did it smell like in there?
Bro, the smell was out of this world, dude. It was just, so there was no toilet, but there was the piping for the bathroom, and they were just using the bathroom directly into the hole.
No.
With no toilet there. There was no running water, so I'm not sure like how they washed it down or what, but this smell was ridiculous. And there was piles and piles and piles of trash inside. Used needles everywhere, crack pipes, just like it took us 2 weeks to get it cleaned, and multiple like 50-yard dumpsters that I needed to rent. The backyard had probably about 15 cars that were like damaged, destroyed, that they were just there. A fully burnt RV, a boat, just like it cost a lot of money just to get the place clean. We needed to get a tractor in there to scoop up the trash, dump it into a trash bin. Like, yeah, it was an experience, man. It was an experience. So,
well, I see some of the pictures.
Yeah, have I shared the pictures with you?
No, dude, I don't think you ever have.
I have a video. That's all you need to see is this video, and I'll send it to you after.
Send it.
Would I have done it again? I don't know if I would have. I learned a lot, but I ended up losing on the deal. I might have made some money if I sold it right away, but I took too long. Was planning on remodeling it myself. Didn't end up working out due to other projects or whatever. So ended up losing some money on the deal, but I learned a lot. So life lesson.
Dude, that's for sure.
But anyways, I think that's a good one for us. Lorenzo L. Realtor on Instagram, SoCal Broker on Instagram, Millennium Mortgage, Millennium Real Estate. So we'll see you on the next one, everybody. And good talking to you, Lorenzo.
All righty, y'all. Always a good time, brother.
Talk to you later. Bye.
All right, later, man.